I do view AI is the first time that machines are and will be smarter than humans. It creates a lot of angst and uncertainty. We're approaching AGI, according to many experts, where on a wide range of tasks, AI will be, quote, better than humans. So it will reinvent what being a human looks like in a really pivotal way.
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nwaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I am joined by Morgan McKenney. Welcome, Morgan.
Thanks so much, Alex. Delighted to be here.
Oh, we're thrilled to have you. And, I think for the audience, just to give an introduction on Morgan, someone who has been, an executive in a variety of different sort of categories over her career, spent some time, most notably in financial services, sort of in the traditional sense. But most recently was the CEO of Provenance Blockchain Foundation and has recently moved into the AI space in earnest. And obviously, we'll spend a little bit of time talking about what's going on in AI and where that may or may not intersect with blockchain. But Morgan, maybe what I wanted to start with is maybe just for you to give the audience who may not know you necessarily a little bit of a flyover of what you've done sort of in your professional career and maybe just a short introduction.
Great. Well, it's a delight to be here, Alex. And I feel incredibly blessed and grateful for my professional experiences to date. As you alluded to, I've worked across a range of financial services, from trading and markets and exchanges to the institutional side and transaction banking, which is largely payments around the world, with a stint in consumer banking as well. And then I leapt to the frontier to become CEO of Provenance Blockchain Foundation. And I think the key point maybe about my career is I've always applied tech for business value and customer impact. That's the major theme. That's the common thread. I was a computer science degree way back in the day from uni. And I gravitated towards roles where I was a lead the brand person, trying to lead the future where clients are wanting us to go, where they're needing us to go, and have done different functional roles, from product lady to COO, CEO, CFO to global career. So 10 years abroad, 4 years in Asia and 6 years based in London, focused on Europe, Middle East, and Africa. Obviously, a lot of time in New York, but also time in an innovation capital, San Francisco, and different size companies. So I spent a lot of my career at Citi. I was there for 18 years, which was 15 years longer than I planned. And then went to the frontier to ultimately a startup, a blockchain foundation trying to re-architect financial services. And so have that agility and dynamism of experiences, but really trying to be leading the industry, particularly in financial services, trying to create what should be next, what needs to be next. And very importantly, I worked with amazing people and for amazing people. I've had great bosses throughout my career. I've learned so much from them. They've been sponsors and advocates as well. So I feel really lucky. And I'm also really excited about what's ahead.
No, that's awesome. And, we've obviously known you for some time, going back to sort of your Provenance days where, we've had, sort of a longstanding partnership with that organization. And so, really great to not only have you here, but also to talk a little bit about, where things are from your perspective in terms of the intersection of blockchain and institutional adoption. And, really maybe starting there, Morgan, we ask a lot of our guests, what inning in the baseball game are we vis-a-vis institutional adoption of blockchain? How would you describe that or give an answer to that?
Yes. Well, first, even though I'm a devoted athlete like you are, and 3-sport athlete in college kind of girl, I had to look up how many innings in baseball. Remember, I've been abroad for a decade, and but there's 9 for everybody, maybe internationally, that doesn't follow baseball as closely. But I would say right now we are at the 3rd inning, meaning we're not at the beginning. And how would I assess that? One, the depth and quality of digital asset teams across financial services space, as an example. All of the major banks have digital asset teams, have been looking at this, experimenting, POC, they've launched things. So that's 1. 2, Bitcoin ETFs were approved and launched in January of 2024. That makes a digital asset accessible to the public, very broadly accessible. You don't have to have a Web3 wallet. You can call your broker and ask them to buy you Bitcoin exposure ultimately. And firms like Fidelity and BlackRock, Franklin Templeton offer ETF funds. You can buy them through Schwab, E-Trade, et cetera. So that makes digital assets more mainstream in that sense and ability to be offered by institutional clients. Most governments globally have spent time on CDBC, that's central banked digital currency, central backed digital currency. And really, that is bringing money onto chain, which is really important. You might have the asset on chain, but you need to buy it with money, fiat money, typically issued by governments that you know the value of on chain successfully. And we are going to have stablecoin legislation that has been under development and in process, bipartisan. And that's, again, another catalyst, but another form of digital money. So I'd say we're advancing, and the recent government change really did help support that, I'd say, third inning assessment.
No, I was going to ask you the question if the new administration turnover was something that, you felt accelerated sort of where we were in the game. And I think, especially on the third point you made on stablecoin legislation. And I also think sort of like regulatory clarity, I think that's definitely something that has been accelerated, I think. And that would be sort of, I think, the market perception, at least.
Absolutely. And if you had asked me that, where were we before this thing, I'd say the game was halted. The institutional adoption game was halted due to lack of umpires, because ultimately it's such a critical catalyst to have regulatory guardrails around how, in many cases, financial assets can be issued, managed, custodied. How do you embed consumer protection while encouraging innovation? And that has been sorely lacking. And that has been a massive inhibitor to the development of institutional adoption on blockchain. So the administrative support, whether it's through SEC appointment and CFTC, whether it's creating crypto asset task force, ultimately encouraging bipartisan legislation to happen, these are all really important ultimately catalysts in the regulatory category that will really be an important way. We'll see stablecoins come alive this year for sure, in a much more mainstream way than we have to date. So very important catalyst, critical. It was a big lesson from my Provenance job because that was during a time when there was a lack of regulatory frameworks, and then post FTX, it became antagonistic. It was really, I learned in trading, the trend is your friend. And the trend was definitely not your friend from that perspective. And so that's a really important catalyst for the folks listening to understand.
No, absolutely. And, you mentioned as part of your professional background, you've been part of big places, small places. And, I think when you look at the traditional sort of financial institution sort of, construct, what do you think is sort of the most pervasive legacy mindset that creates friction for institutional adoption of blockchain? And, I think this could be framed, as innovator's dilemma, but it also could be framed as there's going to be a spectrum of different types of actors in the space, meaning do the bare minimum and only move when the market has told you that you absolutely need to move. But then there's also going to be pull on the other end of the spectrum, which is more of a proactive implementation and really more of an eye towards innovation. So how do you think about that, both in terms of like what's the most pervasive legacy mindset, and then how do you view folks maybe on that spectrum?
I'd say something like innovator's dilemma, which in my words would be incumbency bias. If you look at the top 5 banks in the United States, they made over $130 billion of net income in 2024 alone. Top 5 banks, 2024 net income, meaning bottom line profit. They serve as intermediaries, right? Most of the financial ecosystem is intermediated, meaning you ask your bank to do, send your money, you ask your broker to sell your stock. A blockchain platform allows peer-to-peer engagement and transactions amongst unknown and untrusted parties. And that is deeply disruptive to the way financial services, as an example, works. And so there's massive incumbency bias because if you are in the middle of transactions, you can, basically take that toll. And so I think for the incumbents, it will be a push. They will have to, because you'll have upstarts and firms that are creating the better model, that they, will see pressure and erosion of their margins, that they will have to do something. So the trick is don't target the incumbents, but target the clients of the incumbents. And I'm a product lady at heart, so that means a better product. Target underserved consumers, which there are a lot of those around the world. target underserved businesses, a lot of those. Anybody below the Fortune 500 in the main are, it's harder time to get credit. The supply chain kind of dynamics of making their supply chain more secure are all very difficult. So we can get to a place where anybody on the planet could get personalized ability to save, build their wealth, et cetera, in a very, very low cost way. That does not, happen yet today, particularly, right? Those solutions are not pervasive. So lead with product, build better products. You'll strip away customers. And ultimately, the larger guys, to retain relevance, will have to modify how they do things, is sort of how I see the dynamics play out. Again, it's highly regulated moat. So folks who thought they could provide products and services that are not under the purview of regulation, just all the money and the assets are in regulated spaces because you want, to leave your money with somebody who you trust and there's FDIC insurance, let's say, example. So there's a big regulatory moat today, I would say, protecting a lot of the existing incumbents. But over time, that will change. And again, blockchain allows you to create platform 2.0s, platforms that work better, that they incentivize different levels of participation and can provide a cheaper service ultimately that people can opt into because it's better.
People say Web3 has a user experience problem. The truth is, it has an access to data problem. Have you ever tried answering a simple Web3 question, like what were stablecoin volumes last week, and ended up buried in random dashboards? That's why we built Maverick, the first intelligence engine purpose-built for Web3, turning natural language into real-time protocol-level insights. Learn more about data and AI at validationcloud.io/AI. Links in the episode description. Now let's get back to the podcast. And if I had to twist your arm and say, to make the case for the incumbents to be excited and motivated or incentivized to innovate in this category, what would you say is, a potential rationale for that for them?
Well, it's hard because, again, you sort of have a captive audience ultimately in many ways. I think it will take, and this is one of the reasons, and we'll get to it, but why I think while both are hard, blockchain's super hard and AI is also quite hard in general, because for blockchain, you need a coalition of willing and able. You need an ecosystem of adoption for it to be valuable. You can't just decide to use something yourself. It just won't be as valuable. So I think the catalyst one is real time and agency. So just as, the checkouts in CVS, we've moved to self-checkout in retail successfully, but a lot of things had to happen for that to be true. And, many people just prefer to go through the self-checkout line. They don't have to wait. It's always manned, et cetera. So it'll take us a while because Web3 world, you are the owner and controller of your assets. So the problem is you control it. It's DIY. The buck stops with you. But as people get used to that, then but it will take some time. So I don't have an easy answer for your question.
It was a hard one. I have to admit that, again, I would have very much struggled with that answer as well.
Relevance, but relevance will take a while. They'll need to adopt. And real time agency, I guess, in the near term. Give your customers like at the airport. Our lives are 100 times better than they were a decade ago with self-check-in.
Yep, totally.
It's just a lot easier, and your own boarding passes, et cetera. So agency does work when it works.
Yeah, and when people really embrace it.
Yes.
Speaking of which, you've spent a ton of time in capital markets in your career. What do you think is the one thing or one of the things that people consistently get wrong about blockchain's role in what we would term as modernizing the capital markets?
Yeah, I think, and I'll use capital markets writ large. I would just markets in general, I would say. I think, we have for all of our lifetimes, I have a few more lives under there than you, but really you've had deep liquidity for a very small number of tradable assets, right? So if you think about the number of stocks listed on NYSE and NASDAQ in the US as an example. And what blockchain, again, enables is peer-to-peer transacting without knowing each other and, without needing to see anything beyond that you have what I want and I have what you want. You don't care what my balance sheet is, if it's $0 or $100 million, because as long as we can transact that asset, that's all we need to do. So I think we are going to have a much shallower but broader set of tradable things. And you could think about that even in prediction markets, And again, in the old days, you use derivatives, and I started off as a derivatives trader to hedge real commodities, as an example. But over time, again, there might be other reasons why you want exposure to something or take a stance on something. And it allows you to take a monetary stance. So I think we'll see, because of this ability to transact peer-to-peer globally in real time, you'll see a lot more tradable assets, but that they'll be much shallower across the board to complement the very deep liquid markets that we have on kind of the well-known assets. So you'll be able to bet on anything, you'll be able to predict anything, and you'll get private assets on chain. I think that's one of the other things. We have these large liquid public assets, but private assets, that these are things like real estate, VC, private equity, are highly illiquid. They're non-price discoverable. They're difficult to transfer. And so you'll bring the ability, by putting those private assets on chain, the greater ability to get out earlier than 10 years, let's say 3 years instead of 10. And you'll make those types of assets more liquid, not exceptionally liquid, but more liquid and more tradable and more price discoverable, which will be exciting for investors as well as folks hedging exposure, et cetera.
And you're really, sort of referring to sort of like what happens when you start to tokenize private assets and sort of take that into, on chain. And when you think about tokenization, if we were to zoom in on that just for a second, it's often a topic that's usually top like 3 or 4 topics that are sort of, happening relative to institutional adoption of blockchain. If you were to just sort of look from a time series perspective, like let's call it 3 to 5 years out, what do you see as the most likely sort of ground truth that we have around tokenization? What does the world look like? Back to your example of we'll have a lot more things that are tradable that, in maybe slightly shallower ways, but then public markets, which on a relative scale would still be quite interesting. So what are your sense of like tokenization?
Yes. Well, tokenization, in my view, is, think of it as the first step on the new digital assembly line. It is absolutely critical. It's necessary, but it's insufficient, and meaning the asset was born digital. So it's born and it's now transferable. Because again, I liken this to our world of photos, right? I take a photo, I'm here in Florida with my family for spring break, take a photo of the nieces, and I blast that out to everybody, the family and then my friends. And but I'm sending a copy, right? I still own the original. But by tokenizing assets, that means that you're creating it in such a way that it's digital, but it means it moves from me to you. I no longer have it. And that's obviously critical in financial assets, right? This is the double spend problem. So tokenization is absolutely foundational. But then the real value comes in transacting, right? If I only tokenize it, but it never gets traded, exchanged, moved, then what's the point? It could have lived in another way, another form factor. So you need to create these markets, these platforms of discovery where you're discovering these assets. And, in private asset space, how do you plug into, that's a global market, people who want exposure to different geographies, et cetera. So I think what we'll see is the buildup of the points beyond the tokenization, which will really make the value of blockchain technology sink. That means market, plugging into liquidity pools, distribution, information and data and AI, which you guys have deep competencies in, and you need risk distribution. So it's born digital, but then it needs to go down that assembly line. So you need to create the other parts of the financial asset ecosystem to have that tokenization be valuable on blockchain.
No, absolutely. So maybe we'll take the conversation to a new vector and an area that you are very passionate about, especially more recently. And so for those that don't know, you've shifted a lot of your focus to helping businesses implement AI. Maybe describe for the audience why AI and how that maybe you draw sort of personal passion from.
One of the reasons why I was so focused on blockchain is I do feel it's deeply disruptive to how we do things in positive ways. And that will take a long time to develop that ecosystem, as we've discussed. AI, to me, feels a bit more near field in its functional relevance, meaning it's relevant across functions today, whether that's marketing, sales, BD, product, obviously engineering and coding, and across industries. And the pace of change, I think, AI has been around for a long time, but this next wave is building on a lot of positive things. And with large language models, it's the first time that every human on the planet can talk to a machine and the machine can understand what the person wants. That is a massive change. And that's sort of just the beginning of this next series of waves, right? I mean, LLMs are easy compared to robots operating in the physical world, which we take all of our physical abilities, whether it's to see, to touch, and our tactile capabilities. And then you even get to quantum, right? So there's a lot ahead of us. But I feel like Gen AI is opening up new vectors in such relevance for enterprise and consumer. So that's one. Two, it needs responsible citizens, people who have seen many waves and have seen some of the negative sides of platforms and tech development, so that can balance. Because I do view AI is the first time that machines are and will be smarter than humans. It creates a lot of angst and uncertainty. And how do you train the models well and responsibly? How do you implement with appropriate guardrails? How do you balance the commercial opportunity with positive outcomes for business and society? So I feel like it's a calling for me, actually, to help steer this important next wave of very, very high impact tech to every single person on the planet. We're talking, every kid will be using AI as a mentor. We will be getting personalized medical advice from AI in the not too distant future kind of things. We're approaching AGI, according to many experts, kind of where on a wide range of tasks, AI will be, quote, better than humans. So it will reinvent what being a human looks like in a really pivotal way. So I think it just needs empathetic folks that also can use and get under the hood on the tech. So that's why the passion. So it's taking all this frontier work in blockchain and applying it in an equally frontier space, AI. Equally or potentially more, given its ability to touch everyone.
Here's what most institutions don't realize. You're leaving staking yield on the table, not because of market conditions, but because your provider isn't keeping up. At Validation Cloud, we deliver a high-performance, institutional-grade staking that doesn't force you to choose between security and scale. We are SOC 2 Type 2 certified and support billions in staked assets, trusted by top custodians, exchanges, and foundations. When performance matters, the choice is clear. Learn more at validationcloud.io/staking. Links in the episode description. Now let's get back to the podcast. No, absolutely. And Morgan, I know that you talk a lot about the responsible application of AI. Maybe tell me a little bit more about what that means from your perspective definitionally, because there are different approaches to this sort of responsibility question among some of like the big LLM providers. There are some that are more focused on it than others. You obviously have sort of made it a point to say this is a very important component of the approach to AI. So I just want to get your sense of how you would define and describe that.
And the great thing is, there are AI experts, but everybody's learning, right? Even the experts are surprised by how fast this thing is moving. It's still a work in progress, and I'm working to, so for instance, I'm going to DC for an AI governance sponsored by AI 2030 that focuses on responsible AI. That's this coming week. For me, Anthropic sets the standards. They have a constitutional AI, which is really human principles of how you engage with one another. And they're using that constitution to train their models. They also have an explainability feature. So how do you the problem a lot of AI is it's very black box because it gets so complex with the weightings and how it's basically marching through those weights that explainability becomes very important to understand how a decision or action was recommended or taken. And they also have developed an AI index thinking about AI's impact on society, because again, as we think about the workforce, this will change a lot of things. And so I think they've been on the most forward foot. So I would look to them as a model. They also have a public benefit kind of governance core, the way they manage the company. So they have a lot of different layers, I would say, and they're doing many proactive things. So I would call them a model of responsible AI in terms of from an LLM perspective. And then it's using AI. What problems do you want to solve for AI? Really going after these big, hairy problems in science, in medicine, in health, in populations, et cetera. I think I'm spending a lot of time. Where do I want to help with AI also? Is it small? Is it big businesses, small businesses that really don't have a ton of bandwidth, to be looking at this thing every day and want easy, simple tools, as an example, to respond to their customers. So, to enable commerce kind of thing. So a lot of it's which problem you're solving and then how are you solving it?
And you alluded to this, and I think this is going to obviously, torture, anthropologists for decades to come. There's really this underlying sense of like, how is AI going to change the way society works and sort of what it means to be sort of a human from that perspective. And so when you look at that, I'm sure you can say, hey, there are upsides and downsides to this new technology. It is going to be very disruptive in a very short period of time. But what do you think are sort of at its core the things to think about and how to frame the changes to society that this technology portends?
Yeah, I mean, I think if you break it down in your professional life and your personal life, right? On professional life, a lot of knowledge work is, putting together a whole bunch of information and massaging it and synthesizing it. AI is quite good at that. So how do you help enterprises use all of its unique data sets and very, bifurcated? There's might maybe be 1,000 systems ultimately that a company runs on, and humans have to log into over here and look at this thing, and then log in over here, et cetera. And so, how can you think of it as your new workplace tools? Really aggregate and synthesize information from vast sources. Second, how does it help prepare you for your day? I have 3 client meetings. What should I know? Where are we with this client? Et cetera. You're doing a lot of prep things. So I think there's a lot of helpful productivity of stuff that you don't love to do at your job to help you be the creative thinker and the client facing, really engaging with customers, as an example, if that's near your job. So I think on enterprise, and then even coding, and then starting a company, right? You can start a company. Ultimately, you will have AI team members, right? So startups are already starting with that. And so you'll be able to scale up more quickly. And we already saw scale up quickly with the tools of cloud, and, you can buy marketing services, et cetera. You can buy across functions. So I think entrepreneurs can be super aided by AI and building their product much more quickly. Y Combinator saw most of its class was using AI to develop its products much more quickly than in the past classes, as an example. So enterprise, you'll feel different at your work, whether you're at a big company or an entrepreneur. And then on the consumer side, I think people are dabbling in it. And ChatGPT has 500 million weekly active users. They're trying to get to 2 billion, by 2030. And it's global. This is their growth has been staggering, along with the other LLMs as well. So I think, I'm sure you've seen your Google searches are changed. You're using more LLMs because it just can synthesize rather than you going to different websites and figuring things out. It's bringing all the World Wide Web synthesized for you. So I think everything's going to feel different. AI will be embedded in most of your apps, most of your software, most of how you do things, look up things, know things, and then action. We'll get to agentic AI. The early adopters today will start having agents do things on their behalf, a personal assistant, a family assistant. Again, this is early days in the development, but so, the internet was bringing you all this information. Now your LLMs are synthesizing that for you, and now agentic AI will be able to action things for you with all this context about you. So everything will change. I don't know. You're going to feel it in a lot of ways.
And I think we're going to feel it sooner than a lot of people expect. And I think that's been sort of the consistent drumbeat with with this technology over the last sort of 2 years. Is there anything, Morgan, from your perspective, having been much closer to this technology more so than others in recent years, that you still feel like is underappreciated about AI?
Yeah, I think humans think linearly, meaning you know what you know, and then you extrapolate it on this scale. And tech scales exponentially. And right now, the pace of tech change is the highest that it's been because we are changing every layer of the stack. You guys have your audience has heard of NVIDIA and GPUs. Just think of them as, the chip layer that can do a lot more because it can parallel process. And you have AI coders that can use AI to code software. You don't have prepackaged software anymore, shrink wrapped, precompiled stuff. you're going to have software that evolves, right, as it learns. And so it's like this living organism up and down the stack. So the whole stack is changing. And remember, everyone now can talk to computers without learning, C++ like I did back in the day kind of thing. So you don't have to know the way the computer talks. And so I think what's underappreciated is the pace of change. And I think it's easy to have a lot of worry about it because there's a lot of things to worry about. And so you can just sort of say, well, when I need to kind of know about it, I will. So I think there's a natural ostrich feeling that you just want to sort of stick your head in the sand and like, oh my goodness. So I think what's underappreciated is how much it will change everything by most people. So
yeah, and it gets to one of the follow-up questions I had for you around, what's different about this moment for AI relative to past innovation cycles. And, maybe just to sort of repeat back what I've sort of heard from you, this is going to change everything. And it really is just the size and scope of what's going to change and how fast has just never been seen before. Obviously, I think most folks out there who track what's going on in the AI space, at least if you're in the private markets, has been like maybe most like, sort of like surprised and maybe in some cases like shocked at like the sheer quantum of private capital that's gone into AI. From your perspective, is, when you look at that much capital going into this space over such a short period of time, is there anything for you that you would nuance there to say, well, if you frame sort of this amount of capital relative to the impact and how soon it could happen, there's actually a really strong case for that capital being deployed in that fashion? Or just how would you frame it?
Yeah, we are definitely still in the hype cycle. So I think there's that. And AI at this stage does require significant capital investment. So the big guys, that's why we're seeing massive investments in these valuations, of OpenAI and Anthropic that are very, very, very significant, and fundraisers of, eye-wateringly large amounts of capital. However, I think just like any other tech, there has to be a return. And so I think there's the investing in advance of the full return. But I think all folks who look at it see what is possible, and the price will come down. So, DeepSeek, that folks listening might have heard about, showed what you can do. You don't necessarily, the bigger guys aren't always going to win or won't be the only winners. You can do a lot with a little, which is really big picture what DeepSeek showed. And that will make the price of AI go down, which will make its ROI increase. So I think we're still in the hype cycle, but it's too big not to invest in, I think, for the large tech players, for sure, because it has such competitive risk and disruption possible for the big guys. And then it opens up a lot of things for folks. We're seeing smaller models outperform, et cetera. So bigger isn't always better, is the learning. And we're going to see a lot of permutations of, you don't need the most advanced chip to do a significant amount of things. And you can do a ton with the most advanced chip kind of thing. And all the hyperscalers are providing all the surround sound, folks like Google and Amazon and Microsoft, of security and cloud, et cetera. So there's a lot of different options, I think, for development. So, but it's hard. I wouldn't be investing, like if I was an AI investor only, I think it's hard to know where you'd want to pick your spots. But as a business person, applying tech, I feel like it's the only place to be.
If your protocol is global, your Node API provider needs to be too. Enterprise applications break when RPC doesn't scale with them. For our clients, performance isn't a feature, it's a requirement. Validation Cloud's Node API delivers #1 ranked performance worldwide for the industry's most important blockchain networks. We are SOC 2 Type 2 certified and offer both scalable and flexible payment plans. Start today at validationcloud.io/node. Links in the episode description. Now let's get back to the podcast. So I'm going to ask an extension question off of that answer, because you said something really interesting that I think can be extended to the geopolitical realm. You said sort of the big players are investing because in a lot of ways they view this category as one that they can't lose. And maybe even like the shorter answer to that is even being in second place is a big difference from being the leader. If you extend that to the geopolitical realm, do you view it in the same prism that this is such an important and strategic technology that every country around the world that has the resources to play in it in a major way is looking at it in that same frame? Or do you think they look at it in a different way?
I think it has massive geopolitical implications of If we think about US and China as an example, that is, again, this is a tool that you can do really bad stuff with and you can do really amazing things with. And so I think that, that's why I was calling for responsible citizens. This jaw of the impact is so great and the negative downside is so great of this tech in particular, that, being a leader in the AI space is critical for national security. You're seeing a range of governments announcing investments in AI for sovereignty, for protecting citizens and borders, and another defense mechanism that's really important in cyber world, et cetera. So yes, it's a matter of national security unequivocally, and leadership. This is job creation. Again, the U.S. TSMC announced a $65 billion investment in the U.S. to make advanced chips, and they announced another $100 billion. I mean, this brings massive jobs. It brings research park ecosystem, construction, PhDs in terms of creating 3 nanometer, et cetera, fabs. So, it's also where the jobs will be. It's where the opportunities are as well. So, yeah, it's very important for governments to have a clear policy approach, investment, and foster innovation in private sector.
And just to maybe combine sort of the two threads that we've been on, blockchain and AI, do you see an area where they intersect in a very natural or symbiotic way? Or do you view them as, really like completely separate disciplines that maybe don't have a natural intersection point in the near term, but maybe long term?
I see it on degree of difficulty. So blockchain's super hard, and then AI is pretty hard. So you put them together, that's like, kind of explodes your head. However, I absolutely see intersections, and they're exciting. So for instance, that's one of, key reason why I've been following Validation Cloud so closely, given your AI products and suites complementing your blockchain Web3 infrastructure space, and we can get into that. But think of this, one of the biggest challenges to successful AI is data, right? That's a huge challenge, and blockchain creates a perfect data set that ultimately many people have access to, right? Single ledger. And it's a lot of data, right? If you think about one of its key tenets is it captures immutably every single transaction that's ever happened since the beginning of that blockchain's life. And that is a lot of data. So if you think about data as being one of the key obstacles, one of the very key obstacles, I think that reams and reams of data, especially as these blockchains grow and continue to grow their ecosystem. So that's one. So really, how do you think about AI around the ecosystem, around that data? Really important. I think you see some neat things like longer term in the future, decentralized AI marketplaces, right? Remember, blockchains are a way to create transactions amongst unknown counterparties. You see trust and governance of AI outputs. And there are some early stage companies in these space. But if, again, how do you trust what the AI is kind of coming up with, and the provenance, even provenance of data, as an example? Secure data sharing in highly regulated industries where you don't have to make the raw data available, as an example. So token incentives. Blockchains are great at incentivizing AI contributions, right? LLMs need human trainers, as an example. So how do you reward those human trainers? Blockchain makes that easy. So I think if you take blockchain's strengths, again, this platform, this data quality, the ability to incentivize easily and embedded in the mechanism, and provenance of, right, data or outputs, you get to some interesting intersections. But the base layer is information about the blockchain ecosystem, so which is where you guys are, which I'm very excited about.
No, absolutely. So, wanted to ask you a question, or maybe a provocation, on if you were sitting across in a boardroom from a CEO of a major bank, global bank, that was skeptical about AI and blockchain and some of these newer technologies. What's sort of the one thing you would say to them, or the one stat you would try to throw at them that would just change their mindset or change their mind?
Yeah, that's a hard one. I think, well, the one I would say for blockchain writ large is Bitcoin was born over 15 years ago. It isn't owned by anybody. It isn't controlled by, a single entity. It doesn't have somebody, working the wires in the back, kind of thing. It is operating on its own, right? The way it was set up is how it works. It had maybe some early stage challenges, but in the end, it's been ticking away working on its own. I mean, that is crazy. no company started that thing. No company is managing that thing. So I think that showcases the promise of decentralized systems, and is an important one. People debate about Bitcoin's value, et cetera, but 15 years really without going down kind of thing, So I think that is a key thing. I think in AI, you just look at the relevance of LLMs to people's lives already. Again, this 500 million for OpenAI alone, weekly users, 5 billion in a month kind of queries, et cetera. So I think the relevance of the output for people, again, you go back to interesting products. It's interesting. And again, it's a new tool and you learn where it's good. It's sort of this frontier that's always moving. Where is the LLM good or not? But if you have folks use it, I even asked ChatGPT, tell me what you know about me that I wouldn't necessarily think I'd know about myself, from its empathetic version 4.5. It's pretty crazy because it knows that I've been, doing all this work on AI, et cetera. So it's interesting. So I think it'll be, a testing and learning proposition as things evolve. And then as humans get used to taking the best of and knowing when AI isn't as good. So anyway, so sitting across, and then stablecoin. I think we're going to look and say, maybe we have 200 billion in stablecoin through Tether and USDC today. Money will be on chain, like in the not too distant future, in a real way, and give the people what they want. People want to hold dollars still, so have it be easy, transferable, real time, efficient, and have it represent fiat in a confirmed way through regulatory structure so that it's as good as the money in your bank account or the dollar in your wallet. So I think that'll be the proof point. I mean, 200 billion is relatively small in the money supply of the world, but that number will change significantly. And stablecoin legislation will happen this year.
Yeah, and we agree that I think in terms of the product market fit, so to speak, of stablecoins, it's got an extremely strong case, and the amount of growth that we could see there, I think, could just outstrip a lot of things that we've really ever seen from just sort of a financial innovation standpoint.
Yes, after regulatory framework, money on chain is the massive catalyst. And when you sit next to across the table from a bank CEO and say, look at all this money that's on blockchain, that's where you need to be. I think that will be the siren call. So when money is transacting outside of bank operating accounts, that's sort of very noteworthy and important. So a catalyst for bank engagement, which will be really important because that's where all the dollars are.
Right. Well, Morgan, it's usually a rarity. It is a rarity for us to make announcements that are sort of net new on the podcast. But I'm really pleased to announce that you've joined Validation Cloud as an advisor officially in the last couple months. We're obviously thrilled to have you. A lot of the reason that we brought you on, obviously, is just one, you've got a fabulous background, but in terms of where you spend your time and your deep expertise, it's really across the things we really care about, right? Institutional sort of finance, blockchain, and increasingly AI. And so, I think one of the things I wanted to ask you, you obviously have plenty of draws on your time. You could be spending your time at a lot of places. Just sort of curious from your perspective, why you sort of decided to take this advisory role at Validation Cloud and what really drew you to us.
Yeah, well, first, I'm absolutely thrilled to be an advisor to Validation Cloud. And it was largely through getting to know you and Michael and Andrew and Matt and Manny, the whole team, really through a variety of interactions, across the world, first in a business context and then, post my Provenance role. And so I think the team, you always start with the team and the people and the diversity of backgrounds, I would say, and the talent is really a key catalyst. And then the space. So your focus on Web3 infrastructure complemented with data and AI capabilities, I think blends blockchain's strengths and your focus on performance, your focus on enabling a range of institutional participants to benefit through staking, through Node API, and through your data and AI platform is real packaged way for institutions to engage with Web3 world in ways that are important for their business and their customers. So it's exciting. And I think you have a great team of investors, of course, as well, including True Global Ventures, who I followed very closely as an LP. And yeah, I'm excited for all the future growth that you guys have ahead. So, and being a small part of that and helping support in a range of ways. So I'm thrilled and excited. So yes, I've been a limited partner advisor at Nwaka to help a range of portfolio and fintech companies, but this is my first focused advisory work. Given the talent of the team in the space you're in.
Well, we appreciate it, and we're also thrilled. And so, thanks again, Morgan. And again, I'm really glad we could, unveil that to the broader ecosystem in the world. So, Morgan, the last question we always ask all of our guests is what we call the high stakes hot take. And so, what is your, sort of boldest prediction for blockchain or the AI space or the intersection of the two over the next sort of year or so?
Yeah, well, I think in blockchain world, we will see some important IPOs again, and that's bringing capital to and focus, the ability to invest and get to know companies. That's really important. I think stablecoin legislation, which we talked about, a critical catalyst. And we'll see the growth of stablecoin materially. Banks, I think it might be early this year for them to get in the space, but maybe in 2026, again, which will only make dollars freely available on blockchain in a regulated way, which is super exciting for the world as a payments lady at heart. And then in AI, I think in enterprise, I would say that the field has been plowed. So meaning data is better, governance is thought through, companies have brought in more AI talent. They're spending more this year than they are last year. And they're really trying to bring AI into their core business, whether that's in customer service, it's in their engineering team, it's in their marketing team, sales, employee productivity that we talked about. So enterprises, I think you'll see more mainstream use cases in core business that's client facing, that's revenue upside. It's not just efficiency. And agents, early adopters will be using agents. They'll be testing them out, for some of their life planning, travel planning, et cetera. So people are calling 2025 the year of the agents. It's still very early, but early adopters will be there. So those are some maybe not so bold predictions.
Well, 2026 also is right around the corner already, right?
Right.
So with that, let's park it there. Morgan McKenney, thank you for coming on High Stakes. We're looking forward to having you again soon, and really enjoyed the time. It was a lot of fun having this conversation.
Likewise, Alex. Thank you so much.
Thank you. Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nwaka, signing off.